Season 3 of Shark Tank India has started, and out of that, week 1 has been completed, where we have seen 15 different businesses pitching before the sharks. Now, someone may think like, there were different type of businesses, and I was just thinking that from a tax consultant point of view or from perspective, how I can add value to those businesses. Like, in some of the brands, I found out that there could be potential opportunity to structure their business operations so that it gives them a very tax efficient structure. They can administer the operations as well easily. Also, as a value addition, they can save on the tax cost. Please, so that is where this video we are making this video. Please don't consider this video in any form of tax avoidance. We are not going to advise or speak or opine on any of the tax avoidance practice, but we are going to understand that how they can efficiently manage their businesses from a tax structuring perspective. So this video is for the tax professionals and CFOs and also the founders or promoters of the startups who wish to, understand and structure their operations in more organized way so that they can unlock the value from their business. This is from a CA's perspective. That is from my perspective. Hi, this is C. Abhishek and welcome to my channel, The Learning CA, where we keep posting videos in the area of international tax, transfer pricing and FEMA. I welcome you to all this video. And also, if you like this video, please do hit the like button. And I would also suggest if you are new to channel, please do subscribe to the same.
Also, I wish to tell you that we have come up with a exclusive India transfer pricing course for professionals only who want to practice in the area of transfer pricing as also who want to do the job in the transfer pricing domain. So this course is relevant for those people. It has 900 plus topics. The entire content is not more than 17 hours. So you can complete actually in 9 days the entire thing. And there are subscription packages which are very affordable for the professionals. Do reach out to us for booking your demo call. You can find the link for booking the demo call in the description box below.
So coming back to the topic, in the first episode, we saw that there was this brand called Adil Kadri, right, which was technically engaged in manufacturing of attars and also other type of perfumes. So when as a tax advisor, we understand the business, we understand first what are the value drivers of this business, and appropriately you can advise the clients on the structuring of that value drivers. You might have seen also in big groups what happens is that the value driver entities are different and then they are being held by the main or parent entity, and it keeps on happening. Right. So when we understood the business of Adil Kadri, we can understand that there are a couple of value drivers which can be located in different sort of entities, and appropriately the structure can be managed. Before going to the core understanding and discussing on the entire business, I would just request that this video, I would just like to clarify that this video is for informational purposes only. Please don't take this in form of any advisory from my end. These are my personal opinions which I have evaluated basis of very limited knowledge, that is basis of just what has been displayed on the television, and that is where these are my personal comments. I have not also looked out into much more detail of this particular businesses. This is just for your information and understanding purpose. But as we are tax professionals, so we should know how to render advisory in the structuring area so that it can benefit client from saving their additional tax cost. This is not tax avoidance, but planning for the tax administration, and which can ease out their business operations rather than get messing up everything in one entity, right? Where we know the pain of doing the audits for different business segments, and we know the pain of handling different types of queries pertaining to different business segments in the same entity, right? So it is for this video is for learning purpose only. Now we come back to the case. Now in Adil Kadri, you can understand that they have developed their own fragrances. That is, they have developed their own. They have their own IPs on the fragrances, and that is one of the main value driver, from which the sales may happen, or where the business drives its value. That is one of the things. The second thing, they are also manufacturing the same thing. So they have not given the manufacturing rights to someone else also. There's also manufacturing happening in the same business, right? And the third thing which I also understood, apart from branding, obviously, the third thing which also I understood was that they were also involved in local as also global distribution. So you can understand that now there's an IP which is being developed, there's a manufacturing entity, there's a distribution entity, right? Now, how you organize all such value drivers either in one entity or in different entity, that's where they need to evaluate. Also, we understood that this entity, this business is technically right now loss-making business, right? Now that is where they also have the, they can also claim the benefit of losses in the coming year's profit. That is as per income tax provisions. Whatever is allowed, they can be, whatever for whatever years this particular loss, they can set off again the income in the coming period. So these are the certain aspects that they should evaluate to structure their business operation in a most feasible and practical manner. Rather than avoiding taxes, they can plan out the tax cost and appropriately, they can take the positions. This is just, again, this is for informational purpose only. This is not in form of any advisory. You need to understand this. We are discussing this from value driver perspective, that is from tax structuring perspective only. I hope that clarifies. Now, in episode number 2, we understood that there was this one brand which came, which a website platform, the platform which came, which was called as Interview, which was technically solving the problem for an HR industry. That is the problem for HR processes. One of the processes, they were solving the problem. So now, technically, in this particular business, if you can understand, this technically in this business, what is happening is there's a platform which facilitates conducting of interviews of the candidates, correct? And where they are also hiring the freelancers from outside, and they are making payment to them for conducting the interviews, and then the evaluation happens, and that evaluation is then sent to the client as a part of the service, right? Now this entire platform, you can understand that there are certain hidden value drivers as well here. What are those? We have to understand in this particular video. Technically, I can understand that there are two main value drivers, two or three we can say. I'll discuss the third one at the last, but there are two value drivers from this entire business. What are those? First is that there's already a platform which facilitates, or which facilitates in conducting of the interviews, right? It would have the coding features, etc. So there's a platform which has been built to facilitate conducting of these interviews, and which would have been developed and which is being managed by the entity, right? Relevant entity. And apart from that, there's a hidden value driver that you need to understand, that there is a database of candidates which is there on the platform, or probably wherever they are collecting that database. They are collecting that database. They have all the data related to the candidates, their skills, their academics, etc. Whatever the data, name, number, email ID, etc. They have that data, and they already have this database of these candidates on that platform. So that's also a second value driver, if you can understand from this business. Apart from that, the promoters were also willing to expand this entire business at a global level. Now, how they can do that? From my perspective, from my personal opinion, just for an example, if they want to sell this particular services in the UAE market, we are just taking one example. In a UAE jurisdiction, if they want to sell these services, what they can do in the best manner is, because there lies some business opportunities over there. They can do one thing, that they can try to set up an entity in UAE, from where they can, which will ease out technically their payment collection, which is again an administration part. And second thing is that once when they set up the entity, they can keep their marketing team over there who will market their services in the UAE. For that particular thing, they can pay the commission, or they can pay on a cost plus basis, or whatever the facts pertaining to that particular, whatever the aspects this are required to be taken into consideration for deciding the remuneration part, they can do that. But it will ease out their operations for that particular jurisdiction if they want to expand in that jurisdiction. So this is how they can conduct their global level operations. Also, if in case if they are forming a separate entity in say other jurisdiction for performing the entire functions, that is including taking of the interviews, then collecting of the resumes, and catering to the client of the UAE, then also arrangement of paying of platform fee can be enabled, right? Where the UAE entity can use the platform for conducting their operations, and they can pay the platform usage fees to the entity who's owning that platform. So that can be also possible, in this particular business. These are just basic understanding that how the structure the business can be structured in a well mannered, which will ease out also the administering of tax cost as also the business operations. Now, we come to the episode number 3, where we understood that there was this family group, that is who had their brand in this toy industry, that is a Blix Toys, right? Now you can understand that there are two brothers who are conducting this business. Technically, they are also owning in each other's entity, and the entire family is involved in the business. They had big vision, right? And their business technically they have already organized. They understand. I observed that they understood how to conduct the business in more detailed way, and that's where it can be inferred from seeing their particular pitch that they have already placed their value drivers in the different entities. Now, if they have already done this thing, then an advice would be to check on the promoters level holding. So now you can understand it's not necessary that we have to do the structuring at a holding or offering level only, but at a promoter level also there are certain structuring possibilities. That is, to save the stake of the promoter, or probably if something happens. So in big family houses, or in big companies, you must have seen that there are family offices who manage the investments by way of placing a trust, forming a family trust, and then after they must be parking their shares in that trust. And then so like this way, at a promoter level you can understand the structuring possibilities, and appropriately you can advise your clients also if they are going for if they have a big vision and who are going for an IPO, or if they have very big businesses, the structuring possibility at promoter level can be evaluated and can be advised by a tax professional. I hope this gives you an adequate knowledge on the tax structuring perspective. So in episode 4, we saw that there was this apparel company called Terms, which had their unique, IP on the apparel. So, apparel business is technically a very organized business where they have this unique IPs, manufacturing, brands, patterns, distribution, global distribution, retail outlets. So it's a multiple, it has a very big supply chain technically, and each and every supply chain there could be different entity. Like one entity can hold the brand and IPs for manufacturing part. Then the other entity could be actually involved in the manufacturing operations. Then there could be a third entity which could be engaged in distribution operations, probably at a global level, or probably at a regional level, or probably at a continent level. They have a regional distribution centers for global distributions, and then there are retail outlets as well. So this can be types of entities in this entire supply chain which can be organized in a way that it meets the objective, that is efficient administration of the businesses. So my comments are on that part only for this particular business. Now we come to episode 5. In episode 5 there was, I mean, what I observed was that all businesses were at a growth stage. I mean, none of the business had grown to that extent that it needs a structuring, it needs a structuring advisory. But still, you can understand that one of the business which was there, which the brand called AI Coverage, which technically is into AI, that is IT industry, which caters to IT industry, and where they have this unique IP. There are, they are also collecting the data technically. So there's a database also, app analytics, which we can say. Then, the business happens to subscriptions to the app. Now, right now they were at B2B, but they also wanted to get into the B2C level. So now in the such cases, what happens that once the company becomes big, right? Now, generally in IT industry, we have seen that people do most of jobs at times they might be outsourcing. Like, sometimes the sales functions are outsourced, sometimes the core operations are also outsourced. So in such cases, they can evaluate, particular model for particular activity if they're going to outsource that activity, and appropriately they can, organize their entire IT business into that particular entities who are conducting the major, who are performing the major roles. Just to give an example, like, you must have seen many times that there is a company in India who's providing the software development services to the company which is outside India, based out of other jurisdictions. So in such cases, a software development service provider is there in India of the same entity, who's of the same entity, or that entity would be the subsidiary of the main entity, and then they would be paying on a cost plus basis. So this is a typical IT model which happens in IT industry. So they can evaluate once when they go for a big thing. Also, with regards to subscriptions, for collection of subscriptions, they can also set up their own marketing entities in other jurisdictions. If they want to also expand themselves into the other jurisdictions, they can set up their marketing entities over there, and appropriately seeing the facets and aspects, they can appropriately design the remuneration model, and then they can conduct the operations. So these are my comments on this particular week one's certain businesses which were there on Shark Tank in week 1. I hope this adds value to your tax knowledge. For such videos, please do subscribe our channel. As also, if you like this video, please do hit the like button, and also please press the bell icon for the updates which will come up regularly on our channel. Thank you. This is Abhishek signing off.